The mercenary origins turning blood into gold. Picture this. You're born in a country with no coastline, no oil, no gold, and barely enough farmland to keep your family alive. In the heart of Europe, surrounded by powerful empires, Switzerland should have been a footnote in history, a place people left, not a place fortunes were made. But the Swiss didn't just survive. They rewrote the rules of wealth, and it all started with a business model that would make even Wall Street's most ruthless deal-makers pause, exporting violence for profit. Long before Switzerland became a playground for billionaires and a safe haven for global capital, it was infamous for something far more brutal. In the Middle Ages, Swiss men were Europe's most feared mercenaries. Not just soldiers, but a state-sponsored export industry. Imagine if the US government openly contracted out Navy SEALs to the highest bidder, except this was the entire Swiss economy. The cantons, Switzerland's version of states, signed official deals with foreign kings. The product? Regiments of battle-hardened mountain men, ready to fight anyone, anywhere for the right price. This wasn't some chaotic band of outlaws. It was organized, regulated, and shockingly profitable. The Swiss mercenary business was so successful that, for centuries, it was the backbone of the national economy. Kings of France and Spain paid in gold, not promises. Officers, often from Switzerland's oldest families, returned home with chests of foreign currency. And here's where the story takes a turn that any American financier will recognize: capital accumulation. While the rest of Europe was burning through fortunes to wage war, Switzerland was stacking gold, silver, and hard currency in its mountain strongholds. But what do you do when you're sitting on piles of cash in a country with nothing to spend it on? You lend it out. The transition from mercenary to banker wasn't a leap, it was a pivot. The same families who once let armies start financing them instead. They realized that lending money to kings was safer and more lucrative than fighting the battles. By the time Switzerland declared neutrality in the 19th century, was already sitting on a war chest built from centuries of blood money. This is the first pillar of Swiss wealth. When you have no resources, you turn necessity into a service, even if that service is terrifying. The Swiss didn't wait for opportunity. They created it, weaponized it, and then transformed it into the foundation of a financial empire. And, as you'll see, this was just the beginning of Switzerland's journey from mercenaries to masters of global finance. But the real secret to their rise wasn't just what they did with swords. It was what they did with silence. The birth of secrecy. Banking on silence, having mountains of gold, is one thing. Keeping it safe and making the world trust you with theirs is another. This is where Switzerland's true genius emerged, and it's a lesson that would make even the most seasoned Wall Street veteran take notes. The Swiss didn't just invent banking secrecy. They turned it into a product, brand, and a fortress that attracted the world's wealthiest and most powerful. There's a popular myth that Swiss banking secrecy is some ancient tradition passed down from medieval times. The reality is far more strategic and far more profitable. The real turning point came in 1934 when the Swiss government passed the Federal Banking Act. This wasn't just another regulation. Article 47 of this law made it a criminal offense for any Swiss banker to reveal the identity of an account holder. Not a civil matter, not a slap on the wrist, actual jail time. In a world where privacy was becoming a rare commodity, Switzerland offered something no one else could: absolute silence. Why did this happen? The answer, as always, is money and power. In the chaos after World War I, European governments were desperate for cash. France and Germany started hunting for hidden fortunes, trying to squeeze their richest citizens for tax revenue. But the real drama unfolded when the Nazis rose to power. Hitler's regime wanted to seize the assets of Jewish families and political enemies. The Gestapo even sent spies into Swiss banks, hoping to catch a slip-up and track down hidden accounts. The stakes were life and death. Switzerland found itself in a pressure cooker. On one side, democratic France wanted to tax the money. On the other, Nazi Germany wanted to steal it. The Swiss response: lock it all down. The 1934 law was a masterstroke. Suddenly, Switzerland became the world's black hole for capital. It didn't matter who you were: a Holocaust survivor, a fleeing dictator, a tax-dodging CEO, or a Wall Street titan. Your money was safe. Your name was secret, and no foreign government could touch you. But this secrecy came with a dark side. During World War II, Switzerland became the middleman for Nazi gold, much of it looted from occupied countries and even Holocaust victims. While the Swiss later paid reparations under international pressure, the economic benefit was already locked in. By the 1950s, Switzerland was the undisputed vault of the world, holding the assets of winners, losers, victims, and villains alike. This is the second pillar of Swiss wealth: monetizing trust and silence. In a world where governments seize assets and currencies collapse overnight, Switzerland sold security and charged a premium for it. The world's elite lined up to pay. And with this flood of foreign capital, the Swiss didn't just sit on their fortunes, they used it to build industries, fund innovation, and cement their place as the ultimate safe haven. But, as you'll see, the Swiss talent for turning obstacles into opportunity didn't stop at secrecy. Next, they would master the art of making tiny things worth billions. Value density, the art of making tiny things worth billions. If you're running a business in the United States, you know the importance of scale, logistics, and market access. But imagine trying to build an empire in a country where moving anything bigger than a suitcase means dragging it over a mountain. That's the challenge Switzerland faced. No ports, no easy railways, and no way to compete with the industrial giants of Germany, France, or Britain on heavy manufacturing. So, the Swiss did what they do best. They flipped the script and invented a new formula for wealth, one that's all about value density. Here's the secret. When you can't move mountains, you make your products so valuable and so small that moving them is effortless. Instead of building ships or cars, the Swiss focused on things that could fit in your pocket, but cost a fortune. Watches were just the beginning. But even the story of Swiss watches is a masterclass in turning adversity into opportunity. In the 16th century, Geneva's religious reformer John Calvin banned jewelry as sinful. Jewelers, suddenly out of work, had to pivot fast. Their solution transformed their skills into crafting timepieces, practical, legal, and, as it turned out, incredibly lucrative. But the real Swiss magic wasn't just in the watches themselves. It was in the machines behind the machines. Switzerland became the world's workshop for precision engineering. If you're Apple and you need a robot that can carve aluminum to within a micron, you're not buying that from just anyone you're calling a Swiss supplier. The same goes for the ballpoint pen in your hand, the tiny, perfectly round ball at the tip. For decades, only a Swiss company could make the machines that made those balls. They didn't just dominate a market, they created one. This obsession with value density didn't stop at watches or pens. Swiss companies like ABB and Schindler quietly run the infrastructure of the modern world. Schindler elevators move 1 billion people every day. Nestlé figured out how to turn perishable milk into chocolate and powdered formula that could be shipped anywhere, lasting for years. The Swiss approach is simple. Don't try to make everything. Make the one part of the engine that if it fails, the whole system stops. That's how you get pricing power. That's how you become indispensable. For American financiers, this is a lesson in niche dominance. The Swiss didn't try to outmuscle the competition, they outsmarted them. They found the sliver of the market where they could be the best, and then they built moats so deep that no one else could compete. It's the ultimate playbook for anyone looking to build a business that lasts. And as Switzerland's industries grew more sophisticated, so did their methods. Because sometimes the path to dominance isn't just about innovation, it's about knowing when to break the rules. And that's exactly what the Swiss did next as they set their sights on the world of pharmaceuticals and intellectual property. The patent pirates, how Swiss Pharma stole the show. If you think Silicon Valley invented the art of move fast and break things, you haven't seen what Switzerland did to the pharmaceutical industry. In the late 1800s, while American tycoons were building railroads and oil empires, the Swiss were quietly rewriting the rules of intellectual property by ignoring them entirely. This wasn't just clever business, it was outright piracy, and it laid the foundation for one of the world's most powerful and profitable industries. Here's how it happened. At the time, Germany was the undisputed king of chemistry. German companies like BASF and Bayer held the patents for synthetic dyes and chemical processes that colored the world's textiles. But Switzerland, with no patent laws of its own until 1907, saw an opportunity. Swiss entrepreneurs would cross the border, study German patents, bribe workers, and memorize chemical formulas. Then they'd return to Basel and start manufacturing the exact same products without paying a dime for research and development. The Germans were furious, calling Switzerland a nation of robbers. But the Swiss didn't care. They were too busy making money. When international pressure finally forced Switzerland to adopt patent laws, the chemical industry made sure the new rules protected their own inventions, but conveniently ignored the old ones they'd already copied. With a head start and a war chest of capital, Swiss companies pivoted from dyes to drugs. The same chemical know-how that made blue jeans possible was now being used to create antiseptics, tranquilizers, and eventually life-saving medication. Basel, once a sleepy border town, became the Silicon Valley of biotech. But the Swiss pharma story isn't just about innovation, it's about ruthless efficiency and a willingness to take risks others wouldn't. Companies like Novartis and Roche didn't just dominate the market, they shaped it. And when disaster struck, like the infamous Sandoz chemical spill in 1986 that turned the Rhine River blood red and wiped out aquatic life for miles, the Swiss response was pure pragmatism. They paid the fines, cleaned up the mess, and merged to become even bigger players. Reputation damage? Maybe. But the profits kept rolling in. For American investors, there's a lesson here that goes beyond patents and pills. The Swiss understood that in a world driven by competition, the first mover advantage is everything, even if it means bending the rules. They leveraged their early gains to build a fortress of innovation, protected by new laws and global reach. Today, Swiss Pharma is a hedge against economic downturns. When markets crash and luxury spending dries up, people still need medicine. That steady demand keeps Switzerland's economy resilient, no matter what chaos unfolds elsewhere. So, was it fair for Switzerland to build its pharmaceutical empire on borrowed ideas? Or was it just smart business in a world where the rules are always changing? Either way, the Swiss proved that sometimes the fastest way to the top is to play by your own rules and then write new ones once you're there. And as we'll see, this willingness to operate in the grey areas of global finance would soon make Switzerland the invisible empire behind the world's most valuable commodities. The invisible empire commodities, sanctions, and shadow deals. If you think Wall Street is the beating heart of global finance, you might be surprised to learn that some of the world's most powerful deals are brokered in the quiet, unassuming Swiss town of Zug. Forget the glitzy trading floors of New York or the skyscrapers of London. Switzerland's commodity traders operate from glass office buildings with names you've probably never heard, but their reach is nothing short of staggering. Here's the mind-blowing reality. Switzerland, a country with no oil wells, no copper mines, and barely enough farmland to feed itself, is the middleman for the world's resources. Over a third of the planet's oil, more than half of its metals, and a huge chunk of its grain are traded through Swiss companies. How did this happen? The answer is a mix of low taxes, legal loopholes, and a willingness to do business with anyone anywhere. The story really takes off in the 1970s when a man named Mark Rich, who would later become one of the most controversial figures in finance, set up shop in Switzerland. Rich realized that if he could cut deals directly with oil-producing countries, bypassing the big Western corporations, he could create a new kind of market, the spot market. He didn't care about embargoes or sanctions. If a country was willing to sell, he was willing to buy. South Africa under apartheid, Iran during the hostage crisis, Cuba under Castro, none of it mattered. The only rule was profit. Rich's company, which eventually became Glencore, pioneered a model that turned Switzerland into the world's ultimate commodities broker. The Swiss government, for its part, looked the other way. Tax evasion, not a crime in Switzerland. Busting international sanctions, not their problem. This hands-off approach made Switzerland the go-to destination for traders who wanted to move oil, metals, and grain without asking too many questions. And when the US government tried to extradite Mark Rich, Swiss authorities simply refused. He lived out his days in a Swiss mansion, only returning to the US after a last-minute presidential pardon. But the real power of Swiss commodity trading isn't just in the deals themselves, it's in the leverage. When a cash-strapped country like Chad or the Republic of Congo needs money fast, they don't go to the IMF, they go to a Swiss trader. The trader hands over hundreds of millions in cash, and in return, locks up years' worth of oil or mineral exports. It's like a payday loan for entire nations. And the terms are almost always in Switzerland's favor. The traders never have to dig a hole or pump a barrel, they just move the paper, take the spread, and collect the profits. For American financiers, this is a masterclass in risk management and arbitrage. The Swiss have built an invisible empire, extracting value from the world's resources without ever getting their hands dirty. It's a business model that's as brilliant as it is controversial. The next time you fill up your gas tank or buy a new smartphone, there's a good chance a Swiss company had a hand in making it happen quietly, efficiently, and always for a price. But with all this power comes a need for protection. After all, you can't be the world's vault and broker without making a few enemies. And that's where Switzerland's next move, turning paranoia into profit, takes center stage. Fortress Switzerland, monetizing fear and paranoia. If you've ever wondered why Switzerland is the world's go-to safe haven, it's not just about chocolate, watches, or even banking secrecy. The real secret is that Switzerland has turned national paranoia into a financial asset. In a world where risk is the enemy of wealth, the Swiss have built a fortress, both literally and figuratively, that makes investors, corporations, and the ultra-wealthy line up to park their money in the Alps. Let's break it down. During World War II, Switzerland was surrounded by the Axis powers. Hitler famously called it a pimple on the face of Europe, and even drew up plans to invade. But the Swiss had a strategy that would make any US defense contractor proud: the national redoubt. Instead of fighting on the borders, the Swiss military planned to retreat into the mountains, where they had hollowed out entire peaks to create underground fortresses, power plants, and hospitals. Every bridge, tunnel, and road was rigged with explosives. The message was clear: invade us, and we'll destroy everything before you get it. Switzerland essentially held itself hostage, making the cost of invasion higher than any possible reward. This mentality didn't fade with the war. For decades, every Swiss home was required by law to have a nuclear fallout shelter. Even today, Switzerland has enough bunker space to house more than its entire population. And while the US debates gun control, every Swiss male is conscripted, trained, and sent home with a military-grade rifle. Yet, crime rates remain among the lowest in the world. The result? A country that feels, and is, almost untouchable. But how does this translate into financial power? Simple: the safe haven premium. When global markets panic, whether it's 9/11, the 2008 financial crisis, or geopolitical shocks, investors rush to buy Swiss francs. The currency is seen as a rock-solid store of value, immune to inflation, political chaos, or sudden regime change. At times, demand for Swiss safety has been so high that banks actually charged negative interest rates. Imagine walking into a bank, handing over $1 million, and being told you'll get back less than you deposited. And yet, people still do it, just for the peace of mind. This fortress mentality has made Switzerland the headquarters for global heavyweights, Google's European base, FIFA, the International Olympic Committee, and the World Economic Forum all call Switzerland home. It's not just about low taxes, it's about knowing your assets, your contracts, and your very existence are protected by a country that has made security its brand. For American financiers, the lesson is clear. In a world obsessed with growth and risk, there's a fortune to be made in selling safety. Switzerland has monetized its own paranoia, turning bunkers and neutrality into a trillion-dollar business model. And while the rest of the world scrambles to keep up with the next big thing, the Swiss quietly remind us that sometimes the best investment is simply not losing what you already have. But even the strongest fortress can't keep out every threat. As the world changes, cracks are starting to show in Switzerland's armor. And the next chapter is all about how this financial superpower is adapting to survive. Cracks in the armor, modern scandals, and the crypto pivot. For decades, Switzerland's financial fortress seemed unbreakable. But even the most carefully constructed defenses can't hold back the tide of global change forever. In recent years, the world's most famous safe haven has faced a series of shocks that have forced it to adapt or risk becoming a relic of the past. The biggest wake-up call came in March 2023, when Credit Suisse, one of Switzerland's two banking giants, collapsed in spectacular fashion. For a country that built its reputation on stability and discretion, the fall of a 167-year-old institution was nothing short of humiliating. Credit Suisse had been plagued by scandal after scandal, spying on its own employees, laundering money for international crime syndicates, and losing billions on reckless bets. Eventually, confidence evaporated. The Swiss government had to engineer a shotgun marriage with rival UBS just to keep the financial system from unraveling. For American investors, it was a stark reminder that even the safest banks can fall victim to hubris and mismanagement. But the cracks go deeper than one bank's failure. The world has grown tired of Swiss secrecy. The US and the European Union, desperate to claw back lost tax revenue, have forced Switzerland to open its vaults. Since 2018, under the Automatic Exchange of Information, AEOI, Swiss banks are now required to share account data with foreign tax authorities. If you're an American trying to hide money in Zurich today, the IRS will know about it before you even finish your fondue. The era of absolute anonymity is over. And with it, a flood of dirty money has started to flow elsewhere: Dubai, Singapore, and the wild west of crypto. But if there's one thing the Swiss had always excelled at, it's adaptation. Just as they pivoted from mercenaries to bankers, and from secrecy to innovation, Switzerland is now reinventing itself for the digital age. Enter Crypto Valley, a cluster of blockchain startups and fintech firms in the canton of Zug. The Swiss are betting big on becoming the regulatory capital of the crypto world. Their pitch? If they can't hide your fiat currency anymore, they'll help you institutionalize your Bitcoin. They're writing clear, business-friendly rules for digital assets, attracting entrepreneurs and investors from around the globe. For us finance professionals, this is a playbook worth studying. Switzerland isn't clinging to the past, it's leveraging its reputation for stability and trust to become a leader in the next wave of financial innovation. The country is positioning itself as the bridge between old money and new tech, offering a safe, regulated environment for the future of finance. It's a bold move, and it shows that even the most traditional financial powers can pivot when the stakes are high. But the question remains, can Switzerland maintain its edge in a world where information moves at the speed of light and trust is constantly being redefined? The cracks in the armor are real, but so is the Swiss talent for reinvention. As the global financial landscape shifts, all eyes are on the Alps to see if the world's most famous safe haven can once again turn challenge into opportunity.